Hey, what's up, people? Welcome to MoneyMatters as usual, and today we're going to do something interesting with Forex. Now, I'm going to give you the simplest strategy ever with regards to trading Forex, and this is something that most people will never tell you. They will give you lots and lots of fluff, but they will never go straight to the point and tell you, you know what? You don't need all those funny indicators that you keep using. You don't need all those subscriptions for indicators. You don't need all those complex stuff to analyze the market. All you need is very simple knowledge with regards to support and resistance. And today we're just going to be looking at support and resistance and how you can make 10,000 Kenya shillings in a day if you focus on just trading using these two things, support and resistance. Now, when I talk about support and resistance, I hope you know what I mean. It's just basically price reaction areas. So when the prices are moving, you want to determine which stages or which levels does the price react. Either too many sellers come into the market or too many buyers come into the market and they change the direction of the market. So support and resistance is just price reaction areas. So if you can determine these points, if you can determine these reaction areas, then you can easily make money in the Forex market. And you don't need all those funny indicators that people always keep telling you about. Mine is clean, mine is straight to the point. But remember, you have to be using a good trading system, a good trading strategy, and you must be emotionally prepared. Like I always say, there's no quick money in Forex trading. It's all about skills and making sure you hone those skills, making sure you're very patient with the process, making sure that just like you patient with other courses in your life, with the other skills you're building in your life, patient with the process of building skill sets with regards to trading. And this is gonna be amazing lesson. So I'm going to go into my laptop. I'm gonna show you in just less than 10 minutes how you can easily analyze your markets and make sure you're earning money. Hello guys, welcome here at MoneyMatters to talk about the money mindset, how to make that money, how to enjoy that money, how to manage that money, how to invest that money, and how to show yourself a lifetime of income. Basically financial freedom, guys. So this is a Forex Monday. So today we're just talking about Forex trading, because I always tell people we talk about how to make money. This is one of the ways you can make money in the Forex market or generally in the financial markets. So Forex trading, be it stocks trading, commodity trading, derivatives trading, options trading, futures trading, whatever you want to trade, technical analysis is the same. And I believe this is my first video with regards to technical analysis, because I've been focusing so much on the emotional preparedness, the psychological preparedness, and the need to trade. Do you really have to trade? What are your objectives? What are your plans? Are you just going there because you've seen someone flaunting some money on Instagram? Or why are you going there? So if you have the right objective, you have the right skills, you've done your due diligence quite well, you have a nice broker and all that, you can watch my videos. If you haven't, there's a video on brokers, there's a video on psychological trading, and I'll be coming out with more as time goes by. Otherwise, today we're just going to be looking at support and resistance. And support and resistance here could mean different things. It can be a straight line, or it can be what we call the dynamic support. Dynamic support and dynamic resistance is basically the moving averages. So the moving averages could give you a dynamic support or a dynamic resistance, meaning they follow the market more closely. They follow the price reaction areas more closely. But it's going to be a very simple strategy that if you start applying today, you don't need all those indicators you've been using. So let's get to my laptop. I have two. These are the best. This is a trading view, and then I also use IG. So I use these two basically to trade. I use either trading view or IG to trade. These are some of the best. Like I always say, you have to make sure you love the platform you're using. You have to make sure that you know it quite well, you understand it, you know the indicators, you know the drawings, you know every single thing you want to know on that platform. You don't want to be learning these things as you're trading a real account. That's number one principle. That's very important. Know your platform quite well. So I use TradingView mainly to teach, because I do a lot of one-on-one coaching and training. This one I use for my own trading basically. So it really helps to have different platforms. I have eToro, I have many others really, because I do a lot of analysis on the markets. Otherwise, this is TradingView. So we're going to start here, and it's very simple. Today I said you're going to have the shortest but the best lesson you can ever have with regards to Forex trading. So it's a very simple lesson. Look at this. So this is the AUD USD, and we look at the last few days. So what you want to do when you get into a chart, number one, is you want to do what we call a multi-time frame analysis. So you don't want to just look at the 1 hour if you're trading on the 1 hour. You don't want to look at the 2 hours if you're trading on the 2 hours. You want to look at other time frames and see what is happening. For example, the AUD USD pair, we want to look at what has been happening on a daily time frame before I go to this thing. So I can see here what's been happening. I've been doing some analysis here. You can see I have my support, my resistance levels, all these important levels in the market. And you can see it was coming down for quite a while. So if you were trading this market, you wanted to be biased downwards. You wanted to short this market or to sell this market. It's been trending downwards for a while since May. And then now it seems like there's a reversal down here. We're not sure if it's a reversal, but the last few days from the 23rd of August, this has been going up. So that's something you want to take care of if you're trading on a smaller time frame. If you're somebody trading, doing what we call swing trading or position holding, you may still be careful about this downtrend because you're not sure it has fully reversed. But if you're trading on a smaller time frame, then it doesn't really matter because you're just looking at the last few days. Even though the momentum has been down, but the last few days you can see clearly there's a very bullish move, meaning that the market is going up. Very simple, right? So how do you determine and make very good money without doing a lot of stuff, a lot of fluff? Yeah. So I want to look at the multiple time frame analysis. So number one, I've just seen the last few days it's been going up. So I want my biasness to be up if I'm going to be trading on the small time frame like 30 minutes, 15 minutes, 1 hour. So I want to look at, these upward movements. This is very important. And then I get back to, I look at it again on probably 4 hours, which I always do that. I always make sure I do at least 3 or 4 time frames. On the 4 hourly, I can see, yes, it's been coming down as the bigger trend was telling me, but in the last few days, this is a very important level here. On the last few days, it's been going up and I can see a clear trend starting to form. There's a higher high and higher lows here. So I can see a new trend forming here. So I want to, like I said, I want to be biased towards the upside if we're going to be trading on a daily time frame. No, sorry, if we're going to be trading daily, meaning we're going to be using a much lower time frame. So again, sometimes I come down to 3 hours just to give them maybe the confirmation. And then because sometimes again, if you do the multi-time frame analysis, you find some really good entry points, or it tells you some really good, it gives you some really good candlestick patterns or chart patterns that could actually be a confirmation of where the market is going. So that's very important. And then you come back here and you say, you know what, most of the time I trade on the 1 hour. So if you look at the 1 hour, it's showing you very clearly that this trend has been clearly going up for the last few days. And let's call it. You can see this where the trend changed, this one, and then it started going up. And now this is where we talk about now support and resistance levels. Now in this particular one, I'm going to show you dynamic support. So dynamic support is provided by the moving averages, and I always use these are the moving averages. We have the 21 moving average and the 50 moving average. I use those two. If you're trading on a higher time frame, you can use 100, you can use 20, 50 and 100 depending on what you want. It's very simple. So this dynamic support has given me a very clear trend. So I made my biasness towards the upside. I now know that I'm trying to go up, so therefore any opportunity to go down, I'm not taking it because I know I'm going up. The second thing is I've done multi-time frame analysis, therefore I know where the market is generally going. The third thing, I've now come to where I want to trade, 1 hour or 30 minutes. And the fourth, I've now determined what do I want to use to trade, what kind of resistance or support do I want to use to trade. Very simple, right? So I'll come here, I've seen this clear move. So this was on the 23rd. This thing has been hitting higher highs and higher lows. So you can see very clearly this thing has been hitting the higher highs and the higher lows. You can see very clearly this is higher high, higher low, higher high, higher low, higher high, higher low. You see, but again, what is helping it and what do you want to be looking out for? I want to be looking out for the moving averages. So anytime this market comes close to the moving averages, what does it do? It shoots up. Anytime it comes close to the moving averages, what does it do? It shoots up. Anytime it comes to the moving averages, it shoots up. So what do you expect when the next time this market hits the moving average? Very simple. You're expecting it to shoot up. Now, it's not going to be a very blind shoot up because you're going to need some multiple confirmations. I always say, don't just look for one confirmation, look for many confirmations. So that's just one thing that's telling you, okay, it seems this market is going up. It seems it's playing around the moving average. It's using the moving average as support. And therefore, I need to be very keen around there and see if I can get a good entry point. So there were many good entry points here. As you can see, even around this point, you could see a very good bullish move here, and you must understand that different candlesticks will tell you different stories, which is a different topic we can discuss another time. I don't want to get into that now. If you want me to get into that, please let me know on the comment section below. Do you want us to talk about candlestick types and the entry points and how candlesticks can help you to enter the market? Let me know if you want us to discuss about entry types and the candlesticks. As you can see, anytime it comes close to the moving average, so the next confirmation would be when it comes to the moving average, what kind of candlestick does it form? And that candlestick will give you the story. It's the same thing. So when it comes here, you can see a very big bullish one. It's a bullish engulfing candlestick, which tells you that there are a lot of buyers in the market and we are likely to go up. So if you took this trade here, you wait for it to play out, you take your money out here. Easy money, easy money, easy money. So you can see that's a very, very good move here. So if you took it down here and you waited for it to play out properly, you would have taken your money out here. Very nice moves, right? So you are basically, what I'm trying to explain is that here you are using the moving averages as your support area, as your dynamic support. We call it dynamic support because it's following the market. It's not a straight line. We're going to see a straight line as support and resistance, but this is one support that people don't always talk about. It's not just about straight lines. People always think that you have to have a straight line. No, these moving averages can be very good support areas for you to make money. So you simply want to time it when it comes closer to the moving average. But remember, you must do multi-time frame analysis. You must have checked the daily, the 4-hour, the probably 1 hour and stuff like that. And then again, you can even come down if you want to trade the 30 minutes because you don't have so much time. It's still the same thing. But now this is where I'm going to do a different explanation. When it comes to the 30 minutes, you could find that it's not obeying exactly the movement in the 1 hour, and that's why you must do what we call multi-time frame analysis. So when you come here, you probably want to use a different kind of support and resistance, and that is what we're going to talk about in the next part. So if you come here, you can see now this is the USD card, and because I haven't drawn it here, I don't want to make the video too long, so I had drawn them here already. So instead of now, if you find that the market is so choppy like this in a particular time frame, you want to do to draw your own support and resistance areas, and support and resistance areas are just price reaction point. Where does the price react? Where does it turn? So it depends on which time frame you're drawing them on. This is a 4-hour. Let's look at the daily. I do believe I drew this one on the daily. Yes. So this ones were drawn on the daily because I was working on the 1 hour. So you can see clearly the support and the resistance. The support and the resistance. It's very clear. So sometimes the same support can become a resistance depending on where the market is moving. So this USD card is always trending downwards most of the time, predominantly. But you can see when it got to this support area, the market reversed, went up. It hit that resistance area and then down. So you can see very clearly, if you draw the support and resistance areas, they help you knowing exactly where you want to go. Very simple, very simple. So this is basically just to show you, okay, when the price gets here, it reacts here, it goes up. So if you time the price at a particular support or resistance area that you had determined earlier, you are likely to make money. So let's take it for example. Let me just this is a clear support area. Look at this. I drew this way back, not now. This was drawn way back. So I drew this sometime back, and you can see what happened when the market got here. This is a clear sign that the market was about to trend downwards. So you have the support, you have the downward trend, and probably you would have confirmed where you want to go, where your biasness is. But this was a clear sign of going downwards. If you went to a different time frame, you would definitely know that this is where you want to look for a downward trend. And you can see what happened after it. And this was a resistance area, and I drew this way before. So it means that there are certain points that when the market gets to, sellers and buyers react. I don't know whether it's emotional or what it is, but most of the time. But what I'm saying is that these resistance points and support points, they work. So you saw this one work quite clearly. This one has worked quite clearly. This has worked here. And one thing I want to mention about this resistance and support points is that even if you draw the line, it doesn't mean it has to be exactly on the line. It's an area. It's a price reaction area. It's not a price reaction line. So that's very important to note. It's an area that you're looking at. So that's very, very important that you always take advantage of. So there are different types of support and resistance, and that's what I wanted to put across. There's the dynamic one, then there's the ones that you draw the straight lines. So you can use them to find price reaction points and make clean money easily without using any indicators. You just look at the price reaction areas. Now I hope this makes sense and this helps you in your trading. Tell me if you want more of this kind of analysis. and then we will be doing way more. I need to do some more on psychological trading because I know what affects people is the psychological part, not the skills part. Mostly is the psychological part. So we'll do more of a technical analysis and the psychological part of trading. Thank you guys, and see you next time on the next video.
One's a company, two's a crowd, three's a party coming, move around.